My name is Eduardo Greca, Head of Latin America at Utilico Emerging Markets Trust. In this UEM Insight, I will be discussing Brazil's economic and political developments, the shifting investment landscape, and how our long-term strategy is positioned to benefit from the country's renewed growth potential. Brazil has long been one of UEM's most significant investment destinations. Over the past 2 decades, our bottom-up approach has consistently identified strong, well-managed companies that play a vital role in addressing the country's infrastructure needs. After a difficult 2024, the market has rebounded sharply in 2025, supported by global capital rotation into emerging markets and Brazil's attractive valuations. The Ibovespa index has delivered over 30% year-to-date in sterling terms, with our holdings outperforming the market. Brazil's economy has shown surprising strength, with solid growth driven by domestic demand and strong agriculture output. However, a policy tug-of-war is underway. An expansionary fiscal policy under President Lula conflicts with the central bank's restrictive monetary stance. The result has been high inflation and one of the world's steepest real interest rates, which is likely to weigh on growth into 2026. Fiscal sustainability remains a key concern. Brazil's public debt trajectory is deteriorating, and the new fiscal framework depends heavily on optimistic revenue assumptions. Efforts to raise taxes through executive decrees have faced pushbacks from Congress, exposing the administration's limited political leverage and raising doubts about its ability to stabilize public finances. Political momentum is shifting. Lula's approval ratings are near record lows, and his 2022 election was one of the narrowest in Brazilian history. A rising evangelical and middle-class electorate increasingly support pro-market policies, with Bolsonaro unable to run. More pragmatic figures on the right, such as São Paulo Governor Tarcísio de Freitas, are emerging, a development that could redefine Brazil's political landscape ahead of 2026 elections. High interest rates and tax advantage alternatives have weighted heavily on local equity participation. Yet, valuations remain compelling, at just over 8 times forward earnings, one of the lowest levels in a decade. UEM continues to favor infrastructure and utilities, sectors supported by regulatory stability, inflation-linked revenues, and growing private investment demand. These assets combine defensive characteristics with significant upside potential as conditions normalize. Looking ahead, we expect interest rate cuts to start in early 2026, supporting a recovery in growth. Alongside this, the upcoming elections could bring important shifts in sentiment and policy direction. With strong corporate balance sheets and attractive valuations, Brazil's equity market offers a symmetry upside, a defining moment for long-term investors.